morning. Happy Thursday, everybody. I'm Mandy Brenham coming to you today on another episode of The Full-Time Investor. I'm Mandy Brenham, known as the Joint Venture Queen. Please leave some comments. Let us know that you're here. Ask us some questions. You know what? The value of myself and my guests today are worth hundreds of thousands of dollars. So if you've got a high priority question, post it in the comments and let's get this up and running. I want to thank my producer, Larry Brenham, who's in the background. You might not be able to see him, but he's certainly there. And my guest today, Jon Kepler. I'm glad that you're here. I want to just give everybody a little bit of a background. Jon and I met at a meetup, at a networking group, and I believe you won the prize. Jon won the prize for traveling the furthest. And I thought I had traveled far, so I had traveled an hour and a half, and Jon won this contest. So the benefits of going to networking groups, putting yourself in an uncomfortable spot, a late night, possibly where you don't know anybody, but you never know who you're going to meet and how they're going to stay in your life forever. And so that's how Jon and I connected, and I'm really glad that you're a guest here on my show today, Jon.
Thank you. Glad to be here.
So I'd love to be able to, for you to share with the audience a little bit about who you are, what kind of investing you do, and what kind of successes you've had to this point.
Well, my name is Jon Kepler. I'm a full-time real estate investor. I work in a smaller market and I focus on that market. That market is Owen Sound, Ontario. I got started with no money. I haven't had a job since I was 19 years old and worked at Wendy's. I had a consulting business and I transitioned into real estate. And my spouse, Alicia, and I saved $30,000 and got into real estate by using VTBs as frequently and as generously as possible. So we're able to grow into a total of 15 apartment buildings now, mostly using other people's money.
That's awesome, Jon. Mostly using other people's money. So you know what? Super high level for the listeners today. VTB. Just kind of quickly explain that and what that strategy is.
Well, they can take different forms, but generally speaking, it is a loan from the seller of a property that assists you in buying the property from them. Okay, so you've acquired 15 apartment buildings with $30,000 that you and Ashley saved up, roughly thereabouts. That's the thing, exactly. OPM, so other people's money. And so Jon, you created yourself to be this market expert in this area, in this city, Owen Sound, Ontario, which, some people might have to Google map it to be able to figure out where Owen Sound is. But once you found that place, you started to buy. How did you show up to your first building? How did you even come into the conversation with the seller to be able to say, hey, let's negotiate this property that you have for sale? Well, I don't think it's as creative or surprising as you think, or as some people may think, but it is powerful. I very much wanted to buy real estate and I didn't have the capability. So I spent 2 years doing research. So when I showed up, by the way, the first vendor take-back offer I made was successful. So I spent 2 years getting ready. I know that you can spend too long getting ready, but I made sure that I hit the sweet spot and I knew what I was talking about. So I was able to show up with confidence. I had an understanding of how other people put together these deals, and when the inevitable roadblocks came up and we had to deal with certain unanticipated or unplanned problems, I had answers. And so I think it was the fact that I had confidence and I didn't give the impression that it was my first rodeo that allowed me to get it done. I know. I love that saying. People will say that. So when you show up and somebody says, this isn't your first rodeo, what do you think some of the things are that they're looking you over and that they're listening to with all of their senses to be able to say, why does this guy know what he's talking about? What are some of those things that you think a seller is looking at when you show up? Well, probably first and foremost is the ability to do what you say you're going to do, because they had likely planned or at least hoped to exit the transaction entirely at closing. So you're explaining to them that they continue to be a stakeholder, frankly. They will have a continued vested interest in how the apartment building performs and how things work out and how successful you are for the term of the loan, whatever you negotiate. So if they don't trust you, or they don't think you're going to pay your bills or run a tight ship, you're finished. So it all comes down to being able to give them the confidence that you have a plan and that you're going to execute as planned.
Okay. And that leads right into every time that I've met you, you are so smartly dressed. You know, whatever the occasion is, I know that you're going to show up and you look like business. So how has that been a benefit? Or, you know, what are some of the things that you found in the way that you present yourself at all times?
Thank you. I appreciate that. Frankly, when I was 19, I was briefly involved in this one consulting business where my colleagues and I very much did value a certain style of dress. So the men especially, I was fortunate enough to just be getting my feet wet in the adult world. And they all explained to me the importance of professionalism, and I saw the result. So it was something I naturally got into, and then I just continued it when I got into real estate. And I think at first I wasn't aware of how much of a positive impression I was going to make. I think I viewed landlords as rich and then presumably good looking because rich. And then I found out that, you know, landlords like the public are across the spectrum, and that I actually did stand out somewhat.
Absolutely, you did. So then there you are in majority of these vendor takebacks that you've done. You know, somebody would say, did you find it online, or how did you come about this potential transaction that you got involved with to start? That was my first question.
The first one was on MLS. I think it was before realtor.ca was a website, before they had that domain, but it was a public deal. The VTB was not advertised, but it's something that I asked for. And as it turns out, it was something that the vendor was familiar with and had done previously with other parties.
Okay. So you found your deal online. You were working with an agent at that time, or did you work with the seller's agent?
On that one, I worked with the seller's agent,
okay.
Which happened to be the seller's son.
Okay. So then, did you have a meeting with the seller one-to-one, or were you mainly communicating through an agent?
So in this particular deal, it was through the vendor's son. So he was the one with the real estate license. He was sophisticated, and he had an understanding of not just what I was asking and the language I was speaking, but he also had more of an understanding in terms of what his father, the vendor, wanted than perhaps he let on at first.
Okay. So then have you had a lot of experience, or in the other 14 buildings that you've bought, do you do a lot of transactions direct seller to Jon, or is there a lot of agents involved?
I try to be as direct as possible. Working with agents is something you have to do from time to time. It's much easier when the agent is sophisticated for one reason or another. There's another deal I did where the agent was basically a bigger player and a more commercial player than the vendor, actually. So it was nice to see who was able to educate who and how. Okay. So I'm happy to work with agents. It is better when there are fewer of them, just so that wires don't get crossed and messages get delivered. I love working with agents. I have no problem working with agents, but at the same time, it's sometimes good to work with a listing agent as well.
Yeah, absolutely. My last VTB, the agent had said, so opposite to, you know, that example there, this agent did not know about vendor takebacks. And luckily enough, the seller was in the parking lot of the building that we went to see. And so I literally walked around and went over and shook the seller's hand. So you're right. Sometimes agents can certainly be that educational piece if it's the seller that you might need to educate a little bit, or sometimes they're the hindrance. The agent might be, you know, the non-educated person, and you could go direct to the seller. You know what? I love the stories. Tell me another story of just like real example of a building, and how the transaction was put together.
Well, one of my favorites was when there was an 8-unit apartment building for sale. And actually, this was the one with the fairly sophisticated listing agent as well. So I just asked for a VTB for almost all the money. I just explained that the purchase price was $530,000, and I said, once again, I have $30,000, so please take back the $500. It was great that there was a listing agent who was on my side. I actually did have realtor representation at that time as well. though it was the experience of the listing agent that caused things to move forward. And the additional bonus to that deal was that the vendor's son was a financial advisor. And that worked to my benefit. So they were able to run things past someone else, I guess a third party, from my perspective, a third party, who they really, really trusted. And he said to go ahead.
Because there are tax benefits within a financial plan of somebody going, great, now, here's $500,000 back from the sale. Here, here you go, son. What do you want me to do with it? And the son's probably going, hey, if he's offering you X for interest rates, I just take his option. Is that kind of the way?
Exactly. And they believed very strongly in the building, right? There was no concern about its ongoing viability. They just didn't want to manage it going forward. And that's what it came down to. And they had no plans for the money. So and I asked them directly, what are your plans? And they said that it was actually going to be a problem, right? They're going to have this good problem. They're going to have this lump sum, and they didn't immediately know how to handle it and make good decisions with it.
So what's, which I think we could have a high level conversation here. What are the top 3 reasons that you promote to a seller of the benefits to them of a VTB?
Well, I can tailor it depending on their needs, but generally speaking, top purchase price. So I'll outbid other people. Bottom line, I can work with the interest rate to make it all work. Tax benefits.
Yeah.
And just the fact that I'm a good operator, that they can trust me.
Yeah, absolutely. Absolutely. And the solidity of an asset. If they've owned it for 15 years, what all the maintenance is, or the solidity of this asset that you're investing in is not some unknown car wash on the other side of the country that you're going to take your money from this building and maybe go and invest over there. So I really like all that. What about the creation of you as a market expert? Do you think, that's fine for you, Jon? You invest in a little city that nobody else really knows about. That's how you've been able to do this. But what are the benefits to becoming this market expert in Owen Sound? 2 years of research to be able to do your first VTB. What kind of research did you do to become the expert in that city like you are?
Well, to be fair, I wished it was less than 2 years. I was not one of those people who just sat down and didn't do what it takes to do a deal in 2 years. I had to get my financial house in order, right? So it was fortunate I had that time. Generally speaking, in terms of getting people to know you, it's a smaller market. There are a lot of older people in the market, a lot of retiring landlords. And I think there were actually a lot of vendors who were looking for someone with energy and enthusiasm. And I think I was able to present myself as that person when perhaps there wasn't someone else working as hard to present themselves that way. So as a result, yes, I still get deals off realtor.ca, but I've been approached privately. Once I was approached just during a nice evening at the art gallery, had an acquaintance of mine approach me and say, hey, I always wondered if I had something for you. I had no idea they would ever have anything, but I guess they've been secretly wondering if they'd have something. And they said, I got something now. And so I just built those relationships and let people know who I was and what I was doing. And then they approached me when it was a good time for them. Right.
And you were where? At an art gallery?
I was at an art gallery. Yeah. It just one evening that they had various events every month. I was on the board, though I don't know if my board seat actually helped with that. It was more that I was standing in the main gallery when he was walking into the main gallery.
Right. But you know what? One of my mantras is I'm always in the right place at the right time to meet the right people to make the right deal. Right. Exactly. And so there you are. You are putting yourself in those positions to be able to meet the people that have buildings, that have access to it. I don't know how many times now, as you continue to vibrate on a different level within the investor world, I've had people reach out and say, hey, I've got, 14 buildings for sale. And I was like, where were you when I was looking for buildings? But you have to resonate on this on a higher level. So if you're looking for $100,000 low priced, boarded up house for a flip, well, you're not attracting the people who are selling 15 unit buildings, but you have to become that person along the way. Did you ever flip anything?
No, actually, that's one thing that we haven't done. We do what they call the BRRRR strategy now. So I guess other people refer to that as flip to yourself.
Flip to yourself.
But, yes.
On single families or on large multis?
No, only on multifamily.
On multifamily. So what's the smallest building you've bought? What's the largest building you've bought?
So when I said 15 apartment buildings, I was excluding some single family. So we have a couple more single families. So we generally say that in our multifamily business, we go from 2 units to 8 units.
Okay.
So just small multifamily.
Yeah. Still in the, I say still because I guess we haven't showed the listeners, but you used to live in Owen Sound. What are some of the benefits of when you lived there and maybe some of the benefits of where you are now?
Of course. So 6 months ago, I moved hours away. So I'm now just outside St. Thomas. I was a micromanager, and it's interesting to sell people on essentially what I used to do, because I very much believe in the importance of being in your market day to day, being right in the center of it, but perhaps to a limit, right? Everything has to have a limit.
Yeah.
So we've been very successful being in Owen Sound, pounding the pavement every day. My home in Owen Sound was in the middle of the spread of apartment buildings that we had.
Okay.
So I really couldn't have been closer, right? Like truly, literally right in the hub. But I became a micromanager, and it wasn't necessarily the best use of my time. There's some value once you have scale in separation and leaving tasks up to others, trusting your team. Okay. I didn't need to trust my team as much as I could have or should have because I was too close. So again, 6 months ago, I moved farther away, and it's been very good. I've been very happy with this too, but it's a second phase, and I think it was wise to wait until now to do it. I don't think I should have done this 5 years ago.
Okay, so how long have you been investing?
Investing for about 10 years now.
About 10 years, and you only stepped away 6 months ago. So it took you a few years to be able to start to build up the solidity of your team and know that your assets are in a certain spot. Are you still only investing in one location, or does this now give you the mindset that 2 hours away is 2 hours away and you can invest in various different markets?
So I say from time to time that one day we will start a second hub. So it remains to be seen when we finally take that plunge. I don't think it would be wise to buy one duplex in a new market and then quit. So it's going to have to be a very purposeful second hub where we commit to it for decades, frankly, and go in and buy over time. But for now, we're committed to Owen Sound, and we'll see. Yeah. We'll see when we flip the switch and start the second hub. But for now, until we have 2 hubs, we're full steam ahead on the first one.
Okay, so another great point. You said when you commit to a city for 10 years, how did you get into the mindset? Or, there's a lot of potential. People are, again, in the flip mentality, get rich quick or high amounts of money. Oh, I'm going to flip this. I'm going to make 40 or 50,000. And they like this feeling. But you just described the long-term wealth strategy. How did you kind of get into a mindset of knowing that 10 years is 10 years?
Well, before I started, I would look around at these buildings. I remember driving through the Owen Sound downtown and just observing the assets, noting that they were there, that they were existing. And frankly, I thought to myself, there are people behind those. So those assets are going to perform, and whoever is behind the asset is the winner. So do I want it to be me? And again, on that first deal, I remember when I was reviewing the deal, I noted that the vendor bought it in 1985, and he had tripled his investment over that time. So I noted that he stayed in the market for a period and made 3 times his money. And it just seemed very natural looking at the spreadsheets and looking at how he'd increased rents and how I was to increase rents. It was clear that if I stayed in for a very extended period of time, that I too would triple my money because this building just keeps running and running. So I was fortunate to see that early. I appreciate that everyone loves fast money, even the term fast money, right? There are TV shows called fast money, but it's temp money. It's one-time money. You're not going to get the maximum return on your research and efforts and involvement just doing a quick flip when you can stay in for the long term.
Yeah, there's cash and then there's wealth, and you what is the word I'm trying to look for? You look wealth. You talk it, you show up, you've got the mindset for it. It's not the fast side of things, but it's the get rich over time kind of a vision. They say we overestimate what we can do in 1 year, and we underestimate what we can do in 10. And it sounds like you really have the vision for 10 years. What would be a way that you have gotten into a very long-term generational visions?
in terms of how I got into a long-term generational vision. Well, when I was doing consulting before I had any real estate, I would put together a deal with a customer. We'd agree that they'd pay me monthly. And I just noticed that those things always had expiration dates. Even if it was a year or 18 months, I had some contracts that were great, but they were great until they were dead. And I just got tired of putting the work into a deal and then having the funds come in and then having the funds stop coming in. I thought, I worked to set this up and now it's dead, and I don't like that. I'm going to work to set things up that go on in perpetuity until I say that I'm done.
Yeah. You kind of touch on rent to owns there a little bit. I don't have any rent to owns myself. I know the strategy is a great strategy. It's cash coming in. But I always think to myself, you got to do that again in 3 years? Like, really? Like, I'm set it and forget it. Do you ever attract joint venture capital, or are you doing these financing 100% VTBs, all just you and your spouse? Ashley, I believe her name is.
Alicia, yes.
Alicia,
yes.
Sorry.
I have no problem with joint venture partners. Many of my colleagues, perhaps even most of my colleagues, do joint ventures. I just haven't seen the need. I'm happy raising money the way that we're raising it. I think that the people I work with appreciate their fixed returns. A lot of them are doing it professionally as well. So as I am a landlord, they are a lender. And I think that I just work with people who are happy with this existing structure. Frankly, I like that in terms of the theoretical unlimited upside that is reserved for me and based on my performance. So I do like that they get a fixed return. If I underperform, they get paid. If I overperform, they get paid the same, but then I take the lion's share. So I like the setup. It works for me. I guess you could say it's higher risk, higher reward, but at the same time, and again, not to be negative in terms of joint venture partnerships, but I do like the fact that if I perform especially well or I outdo myself, that I keep that extra profit, and that what I pay to others is capped.
Absolutely. So then in some of these VTBs that you founded, again, vendor take-back mortgages, are you borrowing the down payment? That's where the fixed rate of return is for you to be able to offer to that seller a little, like that down payment portion?
Yeah, so often they are, second mortgages that allow me to put down no or little money. I have done first mortgage VTBs as well. I just, I didn't really think it was possible until I asked and I got a yes. But as it turns out, we do both.
So again, I love the exact examples. What about maybe just describe what kind of bank financing, what kind of seller financing, or the VTB portion, and how much have you put in? Maybe just give a couple of deals as to some numbers there.
Sure. Well, the one that I talked about earlier was a $530,000 purchase price. We put in $30,000 cash, and they took back the $500,000 as a first. I've done other deals where I will go and get traditional financing for 75% loan to value. So on one fourplex, actually in one particular deal, this might not be replicable, but I did it. There was a bank first for 75% loan to value. And I got the bank, with full disclosures, I got the bank to agree to allow a second. It was a very high cash flow property, and the bank allowed a second that was up to approximately 96% loan to value. So I put down 4%.
Was there an appraisal involved in that, and an appraisal happened to come in higher that, it might have been 96% of purchase price, but the bank knew it was worth more, or was it potentially strictly cash flow basis?
The secret there was the debt coverage ratio. The debt coverage ratio was enormous. So the bank got very comfortable with just how well I would do even after paying the second. And it was a low interest second. I suppose if it was an extremely high interest second, that would have been a problem as well. But I got the second mortgage VTB financing at 4%.
Right. So again, some great tips here. So we're talking DCR. So it's really important for somebody to understand how much the asset and the current cash flow will cover the debt of that asset that they're looking to buy, including financing to the first mortgage and financing to the second mortgage. And what else did you say that was just brilliant? Oh, full disclosure.
Yes.
Okay.
So again, I know that sometimes when you approach various institutional lenders and you mention a VTB or you mention any sort of second mortgage financing, they just say no. I was able to find one that said yes. Again, I understand that that's not always something that can be done, but we've done that before. And I think you just need a variety of tools in your toolbox. So maybe you can do that. Maybe you can't. Maybe you have to go another direction. Maybe it's a mix. But at least keep your options open and do what you can to.
How many no's have you ever how many no's have you received? Like, we're talking, you've had some great successes, but I'm kind of curious as to how many times people have said, no, you're crazy. They've laughed, or you've had to go back knocking on their door 3 or 4 times. Like, tell us about some of the ones that you haven't been successful on.
I think I have an unconventional answer to that, because I know that a lot of people are afraid of no. And I know that the retort or rebuttal to that is that you have to get exceedingly comfortable. So ask 100 times, get 99 no's, get 1 yes. The truth is that I don't get rebuffed that often. I've lost VTB deals because they were going to say yes and then found an offer that they liked better. So I know that I can accept. It's not an attack on my credibility. Sometimes they think it's strange. I think in general, I've had detractors in terms of my overall success. I haven't had detractors that I'm negotiating with for a property purchase. I guess I've been fortunate to do what I can to appear credible and act so that they're satisfied with me. So it's hard to give a straight answer. I get people saying no regularly, but it's not 99 to 1. And in almost all circumstances, in I'd say 80% of the circumstances, I can make them think before getting a no. And maybe that's the most important thing. So if you're going to get a no, get an informed no. Don't get a default no.
I like that. And then, and you're getting better, right? If you took 2 years, if you kind of say, 2 years of market research and knowledge building, then you're going into the ball game ready to go. You're not just gonna, practice along the way. You came prepared to be able to do that. So then one other question, are you only looking for deals that offer vendor takebacks, or do you be like, no, I don't need vendor takebacks. That's just one of the ways that I will buy that building?
Well, again, it's a mix. The general concept behind asking for VTBs and wishing to have them is that you're able to buy faster, right? So you're able to buy more with less cash down. So it's a mix. What I do is I manage our cash position. We buy what we can. We look for VTBs along the way, and we do that to maximize how many buildings we're able to buy each year.
Okay. Timelines for your VTBs. Are you finding a certain advantageous length of time that a vendor's like, yeah, I'll hold the mortgage on that for X?
That's a great question. I like 3-year terms. I think that you're paying back the vendor in a good period of time, yet it's also enough time that you can refinance the property. I've lost deals because they really wanted 2 years instead of 3 years. So that's something to be aware of. I've also done 2 years that had renewals attached. And so maybe we said 2 years at first, but then down the road, I ended up getting a lot of time, and I really liked that. So it's all over the map, but I think it's especially important to consider the vendor circumstances and perspectives on that, because that's where you can lose them. If you don't keep them on side in terms of believing in the amount of time and what their outlook is, then they just don't want to work with you. So it comes down to their lifestyle, their goals, and how long they wish to continue to be attached to the property.
Okay. So of course, here we are potentially at the exit of our show, but I'm not going to finish. I want you to explain. That's fine, Jon. You got vendor financing for 3 years on a large 8-unit apartment building. What are you going to do? What is your exit strategy to these vendor financings? Let's just walk us through what you've done when a vendor takeback has now come up to the end of its term.
Well, in some cases, especially if I like the terms of the VTB or the interest rate is nice and low, I will propose a renewal. Sometimes I get yes, sometimes I get no. Over 3 years, if you're able to increase the rents, especially if you bought the building with below market rents and you have some natural turnover, you're able to refinance the property at 75% loan to value. And if you had secondary financing at a higher loan to value, you're able to just pay all that out. That's usually my goal. And then in certain circumstances, once you have a number of properties under your belt, you can also refinance other properties, or just see where else you have equity building up. As all the properties rise in value and your equity increases throughout your portfolio, you can refinance one building in one spot to complete a deal and cash someone out in another spot.
Wow, very cool. So it's certainly a growth process. You know, as you have more, you can refinance to pay this off. It's a little bit of a balancing act. You're almost like a conductor in your own orchestra there, to be able to know what's coming up and what's going to be due and what's going to be financed and what the values are and stuff like that. Jon, what a wealth of knowledge today. Oh my gosh, I certainly have learned from you, and I knew that was why we had connected along the way. So thank you so much for being a guest on our show today.
Thank you so much. I appreciate it.
That was awesome. Okay, everybody, that was another episode of The Full-Time Investor. I'm Mandy Brenham, staying with you consistently every Thursday, 11 a.m. Eastern Standard Time. Please comment below, like and share this video. Keep watching. Next week, I have a really exciting guest with some offers for you. And I look forward to seeing you on the next episode of The Full-Time Investor. I'm Mandy Brenham. Have a great week.